Welcome to this week's Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. An interesting marketing week already in place. Is the cash underwhelming? Where are we at when it comes to weights? And are we really overrun with numbers? Or are we doing okay? Add to it, the feeder cattle will continue to be on the tighter side. But as we all know, and we've talked about this on this program many times, cow kills will continue to pick up. What does that mean as weather and feedstuff continues to get tighter? Well, it isn't Brad Kooima this week. We brought in the A team. Scott Varilek joins us. He is with Kooima and Varilek out of Sioux Center, Iowa. As we look at these markets today, Scott, and just this whole week, it's been interesting for these cattle. You talked a little bit about cash being underwhelming at this point.
I think we're all just a little disappointed that it's been more of a flat sideways trade with not a lot of action. You know, a bid comes out, a 138 or a 140 bid, and it doesn't move the needle. It stays at that level with okay, it's getting close to spring grilling season, spring rallies. You know, the ability to ask for higher prices just doesn't seem to be, in the producer's favor. So we had a little bit of 140 yesterday. That's a couple dollars higher than last week. And then we have a break in the futures, and suddenly there's a little bit of 138 trickling in the south as they can get out of their hedges better. I think that's the way they look at it. The basis gets in their favor. So some of those trades start to happen. So that's why I call it underwhelming, just because I think the opportunity's there, the demand is there. And I don't think the cattle are overrun. So to me, that's a little disappointing. That's as far as we can get, is this 138. And then maybe we get to 140 and then kind of slips back. We've been in this tight little range while futures have been up and down and up and down. The cash is just kind of staying right there with no ability to really take off like I think it should be able to.
Is there some concerns out there, though, about the weights of these cattle on the feedlot side? Because we have had some decent winter weather for them.
Excellent winter weather would be the word for sure. The gains have been tremendous, as we close out these cattle and see what they can do when they have optimum conditions. So that's really put a lot of weight on them and quicker. Producers are generally, these cattle I'm going to try to sell in the end of March and these in April, and they kind of kept them on track for that. So we had the large carcass weights. We didn't think we'd be anywhere close to last year's weights over the last 6 months, just because the year prior was the COVID and backing up cattle, but we have been higher actually on a lot of these carcass weights. So it was kind of a head scratcher that, wow, these cattle did gain, very well, optimum conditions. But what's happening, I think the shift could start to happen as we see these feed costs get away. We see the corn start to move higher. It is starting to move these cattle ahead. We're a little bit more willing to sell because I don't know what this feed cost is going to do. I know it's high right now. So maybe there's a little bit of incentive to try to pull them off earlier. So hoping that starts to weigh in on some of these carcass weights. Am hearing possibly that some of these cattle that are being shipped are starting to lighten up a little bit, hearing that from the trucker's perspective. So I always like to hear those little nuggets. So I have hopes that we can start to close that gap and get some of this weight off them, because we're about out of the yearlings, the cattle that we were feeding for till spring, and we're going to come up onto a calf crop. And are we going to be willing to try to put extra weight on those calves, or are we going to want to pull them early because feed costs are high and you got a little premium in the cash market compared to what the futures show us in the June or August contracts? So might be some incentive to try to sell them a little bit earlier now.
Really, number wise, though, we're doing pretty good. Kind of kept that steady pace this whole winter.
Yeah, pretty steady pace. We didn't really run into a wall of cattle where we had a lot of producers calling saying, I can't get bids. We were able to keep cattle moving right along. And I think that ties to the big picture, the cow herd being on the decline. We've got the increased cow slaughter. We had the dry conditions, pulled a lot of livestock off the pasture that way as well. We feel like we've shrunk this cow herd enough to where these numbers are going to start to get pretty seriously tight. I really like the long-term outlook on cattle. We saw the record profits from the packers. You guys have talked about that on here several times, I'm sure. I don't know if enough of that money was making it down to the producer sector. We see the input costs rising. Try to find some hay or try to fix a tractor, try to fill it up with fuel. And we're going to need to see some money filter on down to the production sector if we're going to continue to try to raise cattle, to try to turn that around, to try to, hey, I'd like to buy a few more cows and run them on pasture. So if it starts raining this year, the incentive might be there, but we're not sure that it's going to yet. You said it's raining at your place right now, but I think it's going to take a lot more than just a small rain to try to get these pastures back into condition. And so that's what I'm looking at. I'm seeing these feeder calf prices have an opportunity to really rally. We're going to add some slaughter capacity in the next couple of years, and we're sitting here with a tight cow herd. I'm trying to buy dips on these feeder calves. You get a day where we have key reversals lower. Some of those, sale barn prices start to drop a little bit. I'm going to have my nose in there and try to look. I think there's an opportunity to be had here.
That's some good advice. Real quick, as we get ready to wrap up, from a consumer perspective, they might hear you talking about cow slaughter numbers being up, which should mean more hamburger opportunities. So hopefully we see a decrease in the price a little bit for them at the grocery store.
Yeah, that's hard to say. I know they've had to kind of change where they're getting their burger from. As far as some of these roasts that they were grinding into some of the hamburger, but that's making a really quality hamburger right there. So when you start grinding some of those roasts into there, but to me, it looks like demand has been outstanding with the prices being at a higher level. So if we have a recession or some very wild outside markets that are really going to kind of impact the way we do business and what we want to buy. And yes, that's the high energy prices that have been we've been seeing. Every meme on Facebook is regarding the high gas prices. So yes, that does cut into the demand a little bit, but the demand has stayed strong. People still want quality. The quality beef programs are still excelling in this market. So that opportunity is still there for good prices to probably stay for the beef producer and for the packing industry. So I don't see a large break coming in the consumer section.
All right. Well, thanks so much, Scott, for joining us this week. And now, as we want to remind folks, I'll get it spit out. Commodity futures and options do involve a substantial risk of loss that aren't suitable for all investors. And that's been this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network.